All right, so people, it's another Sunday and it's time for us to analyze the chart for the whole of next week. Let's see if we can find some chances to make some trades. But before we do that, I want to rant a little bit. I want to talk about something. I woke up this morning and discovered that XNest has deleted my S&D demo account. Yeah, the account I'm currently using to learn Bernd Skorupinski's supply and demand got deleted, and I'm yet to achieve 10% on the first account. So if I achieve 10%, then I can start doing any other thing on it, but I'm still yet to achieve 10%. So that's the rant, but it's not so much of a rant, right? Nevertheless, let's head into this. All right, so we'll start by looking at for the Forex factory market. This is where we pick up what's happening in the economy or the different currency. Well, let's look. This week we have the euro, the British pounds. Let's just write that down. Best way to prepare for it, right? Let's write it down. The euro, the USD, the British pound, and Australian dollar and Canadian dollar. Okay, these are all we have this week. 5 currency focus on. In terms of GDP, right? In terms of sorry, did I say GDP? In terms of central bank rate, let's see. This is the most buy, followed by USD buy, then the Australian dollar. Let's just say 1, 2, 3. The euro is the 4th. Okay, Canadian is the 4th, and euro is the 5th. So in terms of arrangement of GDP, right? Sorry, why the hell am I saying GDP? In terms of arrangement of the central bank rate, this is the arrangement it should be. So let's arrange that properly. We'll have this guy here. 1, so it will be 2, 3, 4. All right, so in terms of arrangements, this is what it should look like. Okay, so it means the one with the highest probability to buy in terms of central bank rate, right? Because it has the best interest rate, and it's where you should be buying, because that is where a lot of investors will want to fuck their money into. Now, if we want to analyze this real fundamentally, we need to start doing individual analysis on every currency. That's each of them across for the whole month. But I can't do that. There's something I really wish I had called the Edge Finder tool made by Trader Nick or A1 Trading Setup. And I entered the raffle draw to get a free copy last week, but I turned out not to be the winner. Nevertheless, we keep going, right? We keep going with the little ones we can achieve. So let's see. We're going to start off by saying, instead of us going through the long process, right? The long process is this. I'm going to give one currency and I'm going to show you the long process with one currency. So one currency, the long process is to pick up, for example, now British pound, and we will look across a time frame of 2 months, right? So since last month till now, what is going on with GDP? So we're looking at the days and the news, the red folder news. Though there are other news that matters if you add up the brown folder news. You're just trying to gauge how many reds, how many greens, and how good is this economy currently, right? So currently, to me, this economy looks like an economy that is slightly okay, slightly okay from here. So like what you can see right now is this method. Using this method is not adequate, and it doesn't really bring out the true information. It's by the time you want to compare it against another one that has multiple news. For example, when I try to compare this against the US dollar, right? Because the US dollar has way more information available. It is easier for me to predict that the US dollar has not been so strong recently. But on the other end, I couldn't predict it for the British pound. So what I do is I go on to Market Milk and then I use the currency strength meter to do my analysis. The strength of a currency is basically its ability, or rather more like the reason to buy it or sell it. So it's telling you the state of the economy basically, because people 80% of the traders who trade this stuff are buying it based on economic values, not based on the chart is going up or the chart is going down. So we're going to look out through the monthly, right? On the monthly, we're looking at the US dollar, the British pound, the Australian dollar, the Canadian dollar, and the euro. And these are our main view, right? Right off here, we can see monthly, the British pound seems to be like the best thing to have. Okay, so we're going to look down again. Wow, the weekly, still the best thing to have. The daily, now it is the second best thing to have, directly below the euro. But it looks like it's tilting a little bit, it's beginning to tilt a little bit downwards. But nevertheless, we now know, first and foremost, British pound is heavily on the buy side. We go again for the US dollar, right? So we can take away the British pounds from the eye view, and we're going to focus on monthly. So obviously the euro is a hard buy. Both of them are hard buys. So for the US dollar seems to have been tanking real hard. Okay, tanking real hard, but recently you can see this last edge here is curving upwards, so the tendency that it is flat. It's currently going flat. You can see it's actually now gaining slowly, so we could just call this flat. Call it flat for now. It seems like it's gaining hard against the rest, right? We already checked the euro, seeing that the euro is a straight buy. Now the Australian dollar and Canadian dollar, now this is the part we need to really look out for. So on the monthly, they are straight sells, very weak compared to any other thing here. Same thing here, very weak, but it seems like you should rather buy the Canadian dollar than the Australian dollar right now. Yeah, so yep, it means you should more focus more on buying this over the Canadian dollar. So though they are both sells, but in terms of strength, we have the British pound is number 1, the euro seems number 2. The strength grounds, the US dollar is printing number 3, Canadian dollar is 4 and 5. All right, now we have numbers based on strength and numbers based on what do they call it, the central bank value, right? That's each central bank's value of each economy. Now we're going to go into the chart. Right off the bat, I have trades still running. I'm going to explain all these trades later. So for now, let's just do analysis based on what we are having. We'll jump straight into the majors. The major AUD USD, that's Australian dollar against the US dollar. I think I already had something like this before. Let's see, is it right here? Is the Canadian dollar. Okay, so assuming I didn't have one here before, right? We're gonna put this somewhere around here. All right, so let's see. So the Australian dollar is weaker than the US dollar. It means I should be buying the US dollar, meaning I should be shorting this market. Let's take a cool look at it. Well, there was a reason to short last week right here. I think I should remove all of this analysis. Yeah, there was a reason to short last week here. So now I'm going to be looking for my context, or rather my reasons to trade. So basically what I am doing right now is, because I have found like narrative bias, what should be buying and what I should be selling, the only thing I'm going to be looking for is narratives and context, meaning I'm going to be using my strategies to look for positions where I should be buying and currencies where I should be selling. I'm just looking for a spot where it is possible for me to buy or sell a particular currency pair. Now in this place I'm supposed to be selling, right? So I'm going to just be looking for a selling opportunity and a possible place to go in and a possible place to come out from. So on the monthly, I have a fair value gap here, which as you can see has been mitigated right here. So I'm looking at this as a means of entry. Now, just from judging this fair value gap looks like something that will seriously fall through for this position to be met. It looks like there's a high probability. It doesn't mean that you should just dive in and do it. So on the daily, I'm just looking for a means, a new fair value gap to work with. So now I am more focused on seeing this market go bearish. So I'm going to look on the daily. I have this fair value gap, right? I have this fair value gap, and this to me means this is the area where I'll be looking for shorting opportunities. Short opportunities right here. You can see this is the height, and then price went back in. So right here, I'll be looking for opportunities to short the Australian dollar US dollar market within this range. If I see a sharp turn on the 1 hour, you all know I deal with sharp turns. If I see sharp turns on the 1 hour, what I mean by sharp turn, right, is that I see something like this happen within this box or just above this box. So I have this fair value gap in, and then I have something like this immediately after fair value gap out. So if I see something like this around here within the week, I know I should just dive into this trade and hold for a 2-hour arrow. 2-hour arrow might be ending up somewhere around here, or just a little bit after this point, maybe here, out of the two. So whichever lays the 2-hour arrow in. It could even be as short as here. Doesn't it doesn't really matter. All I need is just to get an opportunity to jump into this market and actually sell. That's what I'm looking for. All right, so that is it for the Australian dollar US dollar. On the other major, let's see, what's the other major? The other major is Euro USD. I think I already have Euro USD hanging somewhere around here. Do I? Okay, I don't have Euro USD anywhere. Yeah, so let's go Euro USD. So I'm comparing Euro to the US dollar. It's saying I should buy instead, right? Because the Euro is stronger currently than the US dollar. Until news starts to push strength the other way. The Euro is currently stronger than the US dollar. It means I should be searching for buying opportunities. I'm going to start by going into the monthly. Okay, in the monthly, I see a chaotic move, right? I see a chaotic move right here. I'm seeing reasons to sell this market, right? Strong reasons to sell. There's not enough reason to actually buy this market on the monthly technical analysis chart, right? But on the weekly, what do I have? I have this very evident opportunity. Like, in fact, it is too huge to miss. Excuse me. It's too huge to miss. So I have a weekly fair value gap. And though these are monthly fair value gaps, right? These are monthly fair value gaps. In case you do not know what I mean by fair value gaps, just research fair value gaps. So this is where ping pong effects occur. Now this is both overlapping, right? So you could suggest and say that on the daily, this is being respected. No, it is not. Okay, it is not yet. Why do I say it is not being respected? So I'm going to zoom in here to give you a very, very clear perspective of what I'm trying to say. Now, looking at this situation right here, right? Looking at the situation right here, this is what's happening. If this month is not over, right? This month is not over. If this month should end up closing within this area, right? Within this red box right now, then I would hope, like, I'll start to look more for bearish situation, for price to find its way all the way down here first, and then possibly here next, and then here next. Why do I say so? So this, as of right now, this fair value gap is being destroyed on the monthly, but because this is on the monthly time frame and the month isn't over, this candle is not over, the month is not over. If there is a real bearish chance, then this candle, that is this month, is going to end within this place. and it's going to be at least 50% of this entire candle. So you can see this entire candle is 5.45%, and if you calculate 5.45% divided by 2, let's do that. So 5.45 divided by 2 is 2.7. So if the market should not close anything above here, you can see where 2.7 really is so far away. You can see that if the market should close above this point, meaning right here, so if the market should close above this 1.7 area, right, 0.07 area, 1.07 area, there's a high tendency that this market is going to be extremely bullish. Like, even if the market is going to go down, there's a high tendency it will not cover this long range it has made. So this week is like the last week of the month. Then there's a Monday after this week. If by that Monday we are not all the way inside here and still inside here and pushing downwards, bruh, my dear brothers and sisters, it is as well as we are in a bullish market already, because currently we're literally looking bullish on, I mean, take a look at this. On the daily, we are already bullish on the daily. We've already made the change of structure. I think I should just increase this for you guys to really see it. All right, so you can see it. We've already taken out one high, created a new low. We've taken out the second high, created a new low. So as it is, we already have one low, so one higher high, one higher low, one higher low. So as it is, we're already on a bullish move in other time frames, not like this. But on the monthly, we are not yet completely in a bullish move, right? We've not made a low that leads to another high. We've not made it yet. So until we make 1, 2, so I don't know if I'm explaining this thing well enough, but let me just give you guys a clear example. This whole scenario right here is not termed as a bullish structure on the monthly. Do you understand? This is literally consolidation on the monthly. For scalpers, it has been trending, ranging, it has been moving up and down. For position traders, this is as good as a consolidation, right? What will make this become a bullish move is that, you see, as this low is being respected, price finally breaks above this high, and that is whenever price finally breaks above this high, the market is now going to deem it as a correct bullish market on the monthly. And for a bearish market, the market breaks below this low, right? If it starts to break below lows, you can see right now, let me give you an example. Right now we have 1, 2, 3, 4. See, this high is being respected, though this low has been taken. So right now, can you see something? We have 2 lows created. But why is it not a bullish market? Why? Because the low that was created has been wiped out. So now we have the market doing this low. So if we end up seeing this and then this, and then the price continues further to now do this, maybe it could do it like this. But if it continues further to do something like this, it automatically means we are in a bearish market if it does that. But if it doesn't do that and then it starts to do something like this, where it now breaks this high, then we automatically fall into a bullish market. So as it is right now, the monthly is not bearish, it's not bullish, it's nothing. It's basically nothing. So we're just trending bullish on the daily. We've not even found bullish on the weekly yet. We've not found enough reason to call it a bullish market. Yes, we've created this low and this low, but we've not found enough reason to call a bullish market yet. It's heavily bullish, seeming to be as strong as possible with it. So my opinion is this point right now is literally a stronghold. It's a place where we will see lots of confluence, lots of ups and downs that is going to be quite deceitful. Again, like I said, this range is where I expect the month to cross before I'd say, okay, it's going back to being a bearish market, aiming for these ones. But for now, with the bias, right, with the bias of euro being stronger than the dollar currently, we are expecting what? We're expecting that on the 4 hours, what do we see? We see price do this sharp turn, right? See price do something like this within this place and starts coming up. And then we will look for our usual a 2 arrow and we'll be out of this market. So in this market, I think I'll add this to my favorite list. It should be here already. Okay, it is here. So it is here, one of my favorites. It's on my list to be traded this week. So looking for a fair value gap in, fair value gap out to trade towards the bullish side. Next major on the market is the British pound US dollar, and right off I think I have exactly the same premise with this guy. Yes, you can see I have this old trades I had finished working with, so you could just delete all of this. I think it's a similar situation. Yeah, very similar situation. We have very similar situation here. We have the monthly. Now, this is what I was saying. This has more bullish prints. You can see lows respected. You can see that this high has been taken. You can see that this high has been taken. So on the British pound US dollar, we have way more reason to say that we are in a bullish market. We just had a correction and now we are going for, you know, more bullish opportunities. S&D is going to tell you that this is like a level that price is likely going to head back to. But let's just look at what we have right now. What we have right now is that this low has been taken and instantly got rejected. This demand zone was tapped into and instantly we found rejection, meaning this is likely to stand and come back to this area. On the monthly, we do not have an opportunity. Let's look if we have an opposing situation. Yes, we do have an opposing situation. So if by the end of the month we do not end within this zone, then we're likely going hard on the bullish side, right? So but on the weekly, I need to find an opportunity. As usual, I'm finding my weekly opportunity right here. So on the weekly, this is my opportunity, and we're doing what? If you see, this is like a very, very good opportunity, right? It's lapping a very sweet area, a very sweet spot. And if you notice, S&D is going to tell you all of this is bearish price action. Actually, all of this, because this looks like a 70% of the candle. So this is a very strong situation, and then this is one other place. But let's stop mixing it up. This is where I'm looking for a possible move for the daily, while this is monthly. So on the daily, sorry, this is weekly, right? This is weekly, sorry. So it means I'm looking for 4 hours sharp turn. I'm hoping the market finds its way within this zone, this green zone, right? Creates a 4 hour sharp turn, and I'm going to trade for a 2 arrow R. I'm liking the fact that the market is quite clear right now for me. Quite, not that as if it's all that clear. So New Zealand US dollar. I don't have New Zealand on my table. I don't have I have Canadian dollar. Okay, so the US dollar is, I'm definitely going to be, I'm supposed to be aiming for buy in this market. Let's see, we're going to start with the monthly. These are old analysis, I think. Yeah. Okay. Pardon me, I have to select all of this, remove this one from the table and delete the rest. Okay, so I already have my mitigation happen. because mitigation has already happened, this cannot be a position for me. Let's see. I'm not seeing any reason, any new context. I'm not seeing a new context. Okay, there's this one. I think it's been mitigated. Yep. That's equal. Wow, that's equal bottom. So price is definitely coming for this zone. Price is definitely coming to this zone. Since that's an equal bottom, there's a high tendency. It's not as if it's definite. I mean, sorry I used that term, but there's a high tendency price is coming for this first. When it comes for this, then there's possibility for us to now start looking for a possibility to buy the US dollar against the Canadian dollar. Basically, this is what we're looking for, buying opportunity, and I can't find any. So this is not a market I want to put myself in yet. Let's see majors, Swiss franc and Japanese yen. Okay, so we've analyzed 1, 2, how's this? New Zealand. 1, 2, 3, 4 currencies today. If we want to analyze the rest, right? If we want to analyze the rest, which is I didn't analyze New Zealand, I didn't analyze Swiss franc, I didn't analyze Swiss franc, right? And I didn't analyze US JPY. So let's just do that quick analysis for these three, right? For these three, if I want to do any analysis for these three, this is what I'm going to do. I'm just going to put this side by side, right? I don't really need this anymore. So what I'm going to do is I'm going to do something that is going to shock people, right? It's going to shock you guys a little bit. I think I should switch to tab. Why is this page like this? Okay. All right, so the reason why I did this is because I can't even select daily. Jeez. Ah, this guy is so wicked. Okay. All right, so what I'm going to do is I'm going to put you right here. I'm going to have you stay right here. And we're going to start with Euro Canadian dollar, right? The USD card. I just analyzed USD card. New Zealand US dollar. It's getting real long. So we're going to do this in a fashion that is unbelievable. US dollar, New Zealand dollar. I'm going to look at it on the monthly. So on the monthly, we have US dollar tanking hard, New Zealand dollar coming up. On the weekly, the New Zealand flattened, the dollar is going back up. On the daily, so you can see that this market is not so good to trade with. You can see that the strengths are so similar on the daily. There's no space between two of them for us to look at what to trade. Basically, the US dollar seems like it's better than the New Zealand dollar, but the problem is this. So trends change on Fridays. Like if the week is actually bullish, you notice that on Fridays sometimes it tends to print a slightly bearish move. Why? Because a lot of people are closing orders. A lot of people are closing their orders for the next week. So market tends to look like it's about to change a trend, and then the Monday is going to start, and then it's just going to reverse back and shoot off. So I don't trust this for next week. I don't even trust it at all for today. But what I have here is a selling trade, right? My normal technical analysis says that. So let's look at it. My normal technical analysis. We have a monthly fair value gap, right? Monthly fair value gap right here, which leads us to looking for an opportunity. The monthly fair value gap has been mitigated here, and then we have a sweep. But is it yet a clear sweep? Because last week, right, I had this happen. I need to remove a lot of things for us to see what this really looks like. So I need to shift this out. If you look at this candle body, it's printing more of a bullish move than a consolidatory move. So to me, what I am seeing right here is that the market is still very, very bullish, right? It's still very, very bullish. Now it's a month, right? So we have one more week in this month. If this week should push this price lower, then it means that we are all heading for here. So let's look at the weekly candles and see what's really happening. So the weekly candle literally shows you a should I call it a selling signal. It's literally saying, okay, we are finding it difficult to move above this position and we are coming back down. There's so much orders on the selling side. There's so much sell orders available that the buying pressure is lower. That's what ended out the week last week. So in my opinion, I'm looking at this as, you can see, is a sharp tone right now. It's a very, very strong one. And this is the in, this is the out. So I'm going to stick my mouth where my money is, right? And I'm going to place this trade with just a 2RR. This to me is going to be easily called to an extent too. I'm not saying financial advice. This is going to be easily called. And if I should position this right? So this is what I am looking out for. Almost 2RR. So if price comes within this zone and then starts to push downwards, I'll be in the trade. If it pushes in and goes up, well, I'll lose $100. That's what I see for the New Zealand US dollar. Now for the US dollar Swiss franc, let's see US dollar Swiss franc. On the monthly, I like to look at the 3 time frames. On the monthly, Swiss franc has maintained a very high strength compared to the US dollar, and it's stronger over the monthly period. Wow. On the weekly, it is stronger, though the US dollar is beginning to push back upwards in recent weeks. So in the past probably 2 weeks, the US dollar is beginning to gain, while on the daily, US dollar is starting to come back towards the Swiss franc. So in that power, it means the US dollar is beginning to gain. We should be aiming for more buys than sells, and this is one of the tricky places. So I can see this fair value gap is not holding. Not really that it's not holding, but it's so tiny that I cannot trust it, right? It's so tiny that I cannot trust it. I have this ongoing, right? Now this ongoing is messed up to me. It's seriously messed up. These are opportunities for the market to push back up and take out this high. Taking out this high, this other high is so close to it. So literally it's likely to take out this too high at once if it's serious about pushing forward. So what I want is for this month to close above this line. You can see I have a line right here, and I need it to close above this line. Geez, I have so much unnecessary things right here. I think there's another one. What I'm waiting for is for this month to close above this line, and we need to see if it's possible. Well, now you can see, in my opinion, it is not really possible. It's likely not going to work. Why? Because I have this working against me. I have this tendency working against me. Price blasted through this whole position, and now it's within a demand zone, but it's not kicking off the demand zone, meaning it is respecting and it's disrespecting the zone and is looking for more demand. Yes, the Swiss franc is still slightly stronger than the dollar, slightly for now, right? It is still slightly stronger than the dollar. So observing this, right, we're just looking to see, okay, this last week there was more bullish pressure that the price went all the way back here. Are we going to see price work its way into this zone and then push lower? We might, right? We might. You can see there's this pushback for the uptrend. So on the 4 hours, we are hoping to see price do what? Come in and starts to push out. For some of these markets, I prefer order flow. Like this one, I would prefer to see order flow. So So I think what I should do is I should start writing this text down on this place. So I'm looking forward to seeing 4-hour order flow rather than 4 hours STs. Why order flow? What's the difference? So order flow tells me that the market is serious about going down, while ST tells me the market is about to just start going down. There's a difference between it is serious and it is about to. We're about to turn. Doesn't mean we will turn, right? And then I am serious about turning. It means I have turned and I have started facing the new direction squarely. So if I see a good 4-hour order flow, bearish order flow in this market, then I'll take it serious that it's about to really tank for lower prices. And if I'm tanking for lower prices on the weekly, well, I'll be aiming for this low, basically this low. But I might not like just aim straight up, right? It's still 2-hour arrow towards that direction. So my dear people, I think there's one more market left. So the US dollar, Japanese yen. All right, so last but not the least, USD JPY. We're going to start with the usual, the monthly. Okay, so right off the bat, you can see that Japanese yen is also crumbling hard. It's following the currency of the US dollar. Seriously crumbling, though stronger than the US dollar for now, but still crumbling. In the weekly, we even have the US dollar printing a little bit weekly strength over the Japanese yen. And right here, you can see that they are literally struggling together on the same level. So buying here or selling here is way too risky. Way too risky. Like, it's way too risky to even attempt any direction. But on the technical chart, what we have here is I know somebody's going to look here and say, there's a fair value gap. It's wrong. This has not ended. There's no fair value gap. This has not ended. Anything can happen this week. It might just blow off. It might then sink. So there's no fair value gap on the monthly. But what we have here is price seemingly rejecting low, right? It's rejecting this low very hard. It's kind of rejecting it hard on the monthly, but it's not done yet. Seemingly rejecting. So we go down to the weekly to see if there's like proper clear rejections, or the rejection is just like catfished rejection. What we have here is we see price just meddling around, no real push on the weekly. And the last result is the daily. So on the daily, I see, what I see here is something called a short-term high. Short-term high, STH. And why is it called a short-term high? It is a high that leads to a fair value gap. But will this fair value gap follow through? Now, just like I said in the other currency, I would have loved it if this candle body was 50% or less than the entire candle. But in this case, we do not have that scenario, right? We do not have that scenario. I like to just zoom into this position. Yeah. So in this case, we do not have that scenario. Instead, we have very strong bullish opposition right now. So switching to what is it called? Trend lines and supports, right? Trend line and support is going to show you this is what's happening. So we have 1 touch, 2 touch. This is almost 3 touches. On the 4 hours, what we have is we have this. I need to adjust this to fit properly. Right, so on the 4 hours, we have this, and this is still very strong in its stance. On the 1 hour, we are actually bullish on the 1 hour. So this is what we're looking at, right? We're looking at price doing whatever it's doing. If it gets here and breaks above those points on the 1 hour, then you should be buying to come to this short-term high. If it doesn't find a way to come up here, can't break, and comes down here and breaks it, then we should start looking out for this. So you can see I switched out of MMT into trend lines instantly on this place, because different markets has different reasons to come in and trade it. All right, so what I have here on the daily is this. On the 1 hour, do I have a sharp turn? I think I do. I do have a sharp turn that looks like it's failing hard. This is a sharp turn right here. This is the sharp turn we're looking for, but it looks like it is failing very hard. It looks like it is failing very, very hard, because price is returning towards it very hard and with strong momentum. So let's just keep our views and observe, right? Let's just observe, see what price is going to do, see how price is going to deliver towards our positions. Before I even use this, okay, so this is 1 day and 17 hours. For a 1 hour trend, I don't like this. This is not useful. This, on the other hand, let's see. This is how long? It's about 11 degrees. That's nice. Oh, the time frame is too big to even show, so that's enough data. Very strong enough data. Let's see, 9 days and go 18 degrees. Okay, so these two are very, very strong enough data to follow it. So let's just see how price behaves within the zone. All right, people, that is the in-depth view of the market. I mean, that was so long, but we had trades running, right? We had trades running. Euro, New Zealand, and Euro, Australian dollar. They are currently moving. Oh, this one is done. So okay, so we have these two running, right? These two trades running. I'm looking for the Euro, New Zealand dollar. All right, so we have these two running, and basically they are 4-hour trades. They are both 4-hour trades, and we've been watching them move for so long, so long. This is the New Zealand Australian dollar. We're aiming for the 2-hour arrow. I think it's time I actually move my stop losses to profitable zones. I mean, I've gotten to the position where I can move it. I'm aiming for this as a minimum collection point. So by the time the market opens, I should be doing this. So I'm mitigating my loss when the market opens for this one. While for Euro, New Zealand, let's see if we can have any possible chance of mitigation. Nope, we do not have a possible chance of mitigation. So let's just keep our fingers crossed on these two markets and see what happens. For now, we've done a whole lot. I really hope you enjoyed watching this video, understanding the analysis, the process, everything. It's just the majors. What I'm going to be doing is I'm going to be releasing individual videos for individual currency, right? Individual currency, so that we can both analyze and see how far it all goes. But for now, I'd like to say thank you all for watching. Hit the subscribe button. If you're on TikTok, hit the follow button so that you get more of this. Maybe within the day, I'll drop the videos for one like that until we are done with so many currencies. Until then, catch you all on another one. Peace.